Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav, and sorry for a bit of delayed start. It happened because I was trying to set up the OBS anew, and in it some settings related issue arose, and now I think we are good to go, and we will see how we can take advantage of the results, the quarterly earnings from the Amazon, which have been quite sound, quite robust. And in yesterday's session, we saw the stock flying almost 9 percentage point. By yesterday, I mean, of course, the Friday. And in today's session, it is ongoing. The share price is holding closer to the top end after the announcement came in, and even at the moment as we speak, we have the share price of Amazon again climbing up, and I'm expecting the immediate high established at 143.60 to be reached again, so that possibility remains strong. And the only thing to do is to keep looking for buy on dips opportunity in the stock, as the numbers have been quite good for the last quarter. The second quarter of 2023 ended 30th June, and the forward guidance for these ongoing quarters is also quite solid, and both these factors have contributed to the rise in Amazon stock by this much percentage point. We saw that in the last week there were price jumps in many other major tech companies as well, like the Google, FB, etc. But the price rise for Amazon is topping the price rise which we saw in other major tech players, and that is because the both the factors are converging to the upside for the Amazon, which was not necessarily the case for other major tech players. If we consider the quarterly earnings, the company has shown turnaround in multiple business segments. It has picked up momentum on the upside in the retail segment also, which brings in a lot of revenues, but the operating costs tend to be quite high. So it is a small margin business, unlike the AWS, which brings in a lot of revenues, and with quite good margins, even though the revenues from the AWS tends to be quite less in comparison to the revenues from the e-commerce sales, but the margin are quite high in AWS, the cloud segment, whereas for the other segments in which the company operates, the margins are not so good. So the AWS has been the mainstay, the cash cow of the Amazon for a considerable period of time, and even in recent times, after the headwinds created by the other major tech players like Google and Microsoft, which have also ventured in the cloud computing segment and also offering quite tough competition to the Amazon with generative AI products. So there was some issue, negative headwinds, you can say, which were rising for the Amazon, and the questions were also being asked if the Amazon will be able to keep up. But with its own offerings, which is likely to enable its customer to use the generative AI to enhance their profits, and also the experience of using the cloud computing is likely to get better. So the company has also given the number of offerings the number of AI products it has in development phase. So in coming quarters, we are likely to see the positive impact of these developments also help the company in keeping its leading position in the cloud computing segment. So all these factors are enhancing the appeal of its shares, and as a result of that, a lot of new participants have also jumped in this bandwagon and pushed the the Amazon share price higher. If we go into the details of this release from the Amazon, we will see that the net sales in its retail segment, overall these numbers are for all the business segments combined, have jumped in 11%, and the major growth has been coming in from its e-commerce segments, which is now pulling in a lot more revenues in comparison to the second quarter of 2022. And the major chunk of revenues are coming in from the North America, the United States, Canada, and Mexico included. International sales have also increased 10%, and this the cash cow AWS. Here, the sales have increased 12%, which is lower in comparison to the other cloud computing players like Microsoft and Google. But those companies have a lot smaller base. But AWS, the Amazon Web Services, being a lead player, it of course has a much bigger base, and on that base this growth of 12% is, I think, quite phenomenal. Now coming to the operating income, as I said, the retail sale business is a small margin play, and as a result of that the operating income is a lot lower, only at US dollar 7.7 billion, even though the total revenues stand above US dollar 100 billion. And for the AWS, the operating income is quite solid, almost one fourth of its total revenue. The international segment has reported loss of US dollar 0.9 billion, which means its loss from the international operation has halved in the second quarter of 2023 if compared to the second quarter of 2022. Now let's go into the forward guidance statements, and we will also see some of the highlights from the company's announcement. But prior to that, let's consider the forward guidance, the guidance for the third quarter of 2023. So here the company is expecting these positive momentum, the growth in total revenues to continue, and the net sales are expected to be in between these US dollar 138.0 billion to US dollar 143 billion. So that's another growth, the expected growth of almost close to 10 percentage point for the third quarter. The operating income is likely to be in between US dollar 5.5 to US dollar 8.5 billion in comparison to the US dollar 2.5 billion in the third quarter of 2023. So the company is essentially believing that its operating income is going to almost double. That means the cost of company's operations are going down, its margins are improving, its cost of sales is getting lower. That is the win-win situation for the company, because with higher margin you can remain profitable even if the revenues decline or just stagnate around the current levels, and still you can register the profit growth simply by reducing the cost and enhancing the profitability. So So here the company is expecting its revenues to grow as well as its operating margin to grow. So there is a double booster of sort for the Amazon, and as a result of that, the share price is flying at the moment. Today's main takeaway from the forward guidance of the third quarter provided by the Amazon. Now coming to the highlights of the quarterly report here to match the other major tech players in the AI space. The company is also taking measures and it has announced multiple generative AI products. So these products are likely to help the existing customers better utilize the cloud computing support provided by the Amazon and enhance their business operations. So this is also a positive for the users, and the lead which the Amazon enjoys is likely to consolidate, and it is going to maintain its leading position even in this AI phase, as other major tech players are innovating and adding newer and newer products. So the Amazon is also taking its own share of measures and keeping its business operations nimble and reacting to the situation. Now let us go to the technical side of the story and see what is happening there. So here there is the substantial jump which we saw in the share price of the Amazon on Friday after its quarterly announcement came in, and even in today's session, the uptick is all there to see with the expectation of the share price climbing past these high touched in Friday's session. So the only thing which we can look at is to go for the buy trade, and for buy, of course, we need a better risk reward ratio also, because even though the momentum remains strong, it looks strong, what if the share price doesn't really move much, and in the next couple of sessions, or even for that matter next couple of weeks, the share price if stagnates around the current level after the factoring in of these positive results? In that kind of scenario, we don't really want to lose too much money. Instead, we want to profit, so we have to factor in that possibility as well, and go for the buy trade, but only when the timing is right, when the risk reward ratio is favorable and our risks are minimal at the best. So for that, we have to take into account these formation of recent highs and recent lows. Now that we have a fresh high in place, with this formation of higher high, all we need to do is to make sure that we buy the stock at a higher low, because that is going to provide us a better risk reward ratio. So the natural choice is to buy it at its new higher low, as and when we feel that now the risk reward ratio is quite favorable. So watch out for the share price moves in a couple of sessions right now after this substantial jump from the prior swing low. This swing low is quite far away. If we go for the trade while keeping this swing low as our possible stop loss, then that is going to increase the risk which we need to take quite substantially, and this much risk I don't really feel is advisable for any single trade. So the next best thing we can do is allow it to make a fresh swing high, and then whatever is the immediate swing low, if things stabilize again and the Amazon price gives you the opportunity to buy it in the subsequent decline, subsequent dip after a fresh swing high, maybe that might be the opportunity. You can jump in and go for it, go for the buy trade while keeping the immediate swing low as your stop loss. So that means waiting it out, allowing the price action to give you better opportunities. By better, I mean better risk reward ratio, because even now the momentum is on the buy side, so that is not in question. But the thing is, right now the risk reward ratio is not looking good enough, because we need to take a lot of risk if you are buying it from the perspective of the swing trade. If you want to hold the position for a couple of sessions at the minimum, then you do have to take into account that this current price is substantially higher than what we were looking at in the Friday session. So we do have to be careful and go for the new trade when we have these possible loss at the minimum level. So that's all from my side for today's session of Daily Stock, where we consider the fundamental as well as the technical side of this Amazon story. We looked at its numbers, the quarterly numbers, and also its share price moves to see if there is any immediate opportunity for us with a higher probability of profiting. But given the current circumstances, I think wait and watch is a better approach to take. And once things stabilize and once we feel that now another rally is likely to start on the next dip, we can indeed go for the initiation of a new buy trade. So that's all from my side. If any of you have any query or any idea to share, do write to me in the feedback. You can also write to me about any particular share price which you are interested in, and I would also try to cover it in the upcoming sessions of the daily stock. So do come back next time around. Thank you all for joining in. Have a good day. Goodbye.